Hi there. I have good news and also bad news, especially for PDD shareholders. As you can see, PDD Holdings has reported the results for the second quarter and the stock price has declined by over 34%. Almost 50 billion were gone from the market cap. As you can see, now the market cap is about 134 billion. In the past was around 200 billion, close to Alibaba. They even surpassed Alibaba in market cap. But now things have changed. If you look at the results, you may wonder, why? Why the stock price has declined so much? When the revenue has increased by over 86% year over year, and their net income has increased by 144%. So this is an amazing growth rate, but the stock price went down 30% in just one day. Why is that? Well, you probably know that management announced that revenue growth will inevitably face pressure due to intensified competition and external changes, as you can see here. And profitability will also likely to be impacted as they continue to invest more in their business, in their ecosystem. As they said, they will invest heavily in their platform's trust and safety, support high-quality merchants, and improve the merchant ecosystem. And because of this announcement, that the revenue growth will slow down and the profitability will be impacted, the stock price has been heavily affected, a decline over 34%, and the market cap is about 134 billion. Now, if you look at their balance sheet, you can see that they have quite a lot of cash, 39.2 billion in cash, US dollars. And as they said, they are focused more on improving their ecosystem. They have the resources and hope they also have the right strategy to attract more merchants and customers to their platform and increase the revenue more in the future. They said in their earnings call that in the short term, their earnings will be affected. You will see some ups and downs. But in the long term, they are confident they will grow more in the future. And so for the revenue. Now, besides this slow growth rate, they also announced that they will reduce fees for merchants, especially high quality merchants. They will reduce their fee. And when they do that, the revenue goes down. I mean, they will earn less. Maybe the decline won't be that high. Let's say 30% in the revenue. Maybe just a small decrease, or maybe they'll report an increase of about 5% or flat. But their earnings will be affected. You have to be careful because the stock price depends on their final profitability. The higher the earnings, the higher the stock price goes. Now, as I said, they have 49 billion in cash to invest in their ecosystem and expand their business. Plus, as you probably know, PDD Holdings had good tailwinds from China. As you can see, China GDP annual growth rate, or per quarter, you can see here, is around, or better said, between 4 and 5%. So this is a good growth rate. As long as China keeps growing by 5% or 4% for the next 10 years, PDD Holdings has good tailwinds. As I said, in the short term, the stock price might go down to $50. That can also happen. That's why you have to be very careful when you invest. When is the right time to buy? Because if you buy the highest peak, as it happened in 2021, and you thought that the stock price will grow a lot, based on this good tailwind, China GDP, a growth rate of about 5 or 4%, then you would have thought that the stock price will double from $200 to $400. But as you can see, there are many ups and downs. a decline of 17%, and then an increase of over 120%, or even more than that before that decline, 250%. So you must see the same cycle. Another decline in the stock price as they announced. Slow growth rate and low profits for the next 2 years. Maybe the stock price will go down again, back to $50, and then if they succeed with their strategy to improve their ecosystem, then the stock price may rebound back and have an increase like this, 300%. But be aware that this will take time. Their strategy won't work overnight. In the next quarters, you will see some declines in the revenue and profits, and the stock price may react even more than that. You might see higher declines. And then after 2 or 3 years, the stock price may rebound. But as I said, don't try to predict the market. Be careful when you invest. And look at their business, their strategy, if it is likely to work in the future. Because as you probably know, they also compete with Alibaba, JD.com, and other small players. And of course, internationally, as you probably know, PDD Holdings has a platform, Temu. They also compete with Amazon and other local players in different countries. So you have to be very careful to watch their performance. And if you believe in the future of this company, that they'll do great, you trust the management, their strategy, that they have good strategies, then you can take advantage. What I can say about management is that they are quite honest. They announced that the revenue will be impacted and also their profitability. They said that in their earnings call and also in this earning release. Even though the total revenue has increased by 86% and their profits by 144%, they announced that they will invest more in their ecosystem and their profitability will be affected. They could have said that this was a great performance. We increased the revenue and earnings. And then we'll see what will happen in the future. But they had the courage to say that revenue growth will slow down and profitability will be impacted. And this is something to appreciate. When somebody is honest, they tell you the truth. Because next quarter, or maybe next year, when they will announce that profitability will improve, maybe after 1 year or 2 years, then you are likely to rely on their word, what they are saying, the management, their honesty. And if you believe in the strategy, that it works, and their competitive advantages, then you can take advantage when the stock price is quite low. So it's up to you how you want to invest in this company. And of course, if you like their business model. Based on these earnings that they currently have of about 4.7 billion per quarter, let's say they might make around 18 billion a year. And if you believe that in the long term they'll be able to maintain these earnings around 4 billion, maybe they'll decrease to 4 billion, this means 16 billion a year, then the market cap may be around 160 billion, but it also depends on the growth rate. If the growth rate is flat, the market cap may be around this level, 150 billion, 130 billion. But if the growth rate goes higher, about 5 to 10%, then the market cap can double from the current level. You see this PE ratio around 10, and you might say that it is quite cheap, but be aware of their profitability. That will be affected in the future. We don't know for sure how much their earnings will decline. Maybe a decline of 50%. If that happens, and they report only 2 billion per quarter in earnings, that will be quite bad. Because from the current level, you might see another decline of 50% or 40%, something like that. But If the earnings will be erased, there will be zero or with minus, and that will be quite bad. At the current level, PDD holdings will be quite a bad investment. So it's quite risky to step in right now and take advantage of PDD holdings. Their earnings will be affected, as the management said, and there is high competition from the other players. So it's up to you how you want to invest right now, to wait or step in. And if you have other questions about this company, please let me know in the comments.